Welcome once again to another session of our studies. We are still looking at disposals account, the provision for depreciation account, and the non-current asset account. Now we're on the disposals. Okay, so if you've been following or if you've actually looked at our two of the videos that I've just made, you can see that there is a progression of these accounts. Okay, like for example, we said that whenever we sell a non-current asset, we credit the non-current asset account. Like in this case, our delivery vehicles account, which we credited by 25,000 that we sold. Because we said when we sell this delivery vehicle, right, on 31 March, we actually need to make sure that we credit our non-current asset to clear it from our books. So when it's credited in the non-current asset account, the corresponding entry would be to debit the what? The delivery vehicles what? Account. So we're going to come here and then on the same date, which was actually 2020 March what? 31. And then we're going to say what? We're going to say delivery vehicle. That's where it is coming from. Delivery what? Vehicle. Okay? How much was it? 25,000. So that's how we do it. So that delivery vehicle that we credited in the non-current asset account, the corresponding entry is now debiting the what? The disposals account with the cost of that particular delivery vehicle we have disposed. So it comes here, and then it lands here as 25,000 on the what? On the debit side. Then another thing is, remember I also told you about something. On the same date, 2020 March 31, right? We said that in the provision for depreciation, we debited the provision for depreciation with the total of the accumulated depreciation for this motor vehicle, if you remember. And it was actually 11,250 in total. So we debited that one, the provision for depreciation, and we have to credit now the corresponding entry. We have to credit the disposal account with the total accumulated what? Depreciation. So we're going to come here and we put our proof for depreciation. The total was 11,200 what? And 50. I think if you remember, we said that when you're doing disposals, you actually debit the provision for depreciation account with the total amount depreciated for that particular non-current asset, and we credit our disposals. That's what we've just done here. Okay? At the same time, we know that we receive some amount back for the sale. This is amount coming from the sale of the non-current asset, which was how much? 10,350. Okay? So what I'm going to do is we're going to add this and that and see which one is the bigger number there. The bigger figure. If we say 11,250 plus 10,350, it gives us 21,600. So 21,600 is less than 25,000. So we're going to put 25,000 in, 25 grand, 25,000 there. Right? And then here, we are going to have income statement. The difference is going to be the income statement. It's no longer balance sheet. That's the amount that goes to the income statement here. And if you check, if you subtract this one, 25,000 minus the 21,600, it gives you 3,400. Right? You have done your disposals. What does that mean? It means that this motor vehicle was bought at 25,000. And we assume that during its lifetime, it has lost value through depreciation amounting 11,250 in total. As we have sold it and we got proceeds worth 10,350. Right? But this amount we got here is basically 21,600, which is less than the amount we bought the what? The non-current asset with. So what does that mean? It means that this particular motor vehicle was sold at a loss of 3,400. So that particular amount here is basically referred to, it's a loss on disposal. So if, let's insert a case, if the provision for depreciation and the amount we received was greater than the amount we bought this non-current asset at, it would mean that now the balance sheet, the balance figure, which is the income statement, would come this side, which means that will become a profit on disposal. So this figure is transferred to your income statement, okay? Under other income, it actually, this one, it reduces your profit, so it's like an expense in your income statement. If it was a profit on disposal, you would add it to your what? To your gross profit, isn't it? So here you less it because it's a loss on disposal. If it was a profit, you would add it to your gross profit. So that's easy. That's how you do the disposals what? Accounts. Just an issue of debiting the disposal with the cost of the non-current asset and crediting the provision for depreciation total and the amount we are receiving, so that we see whether it was sold at a profit or at a loss. So this is the question that I took from November 2021, variant 2.1. Thank you very much for watching. Remember, if you want to have extra lessons, we also provide lessons. We provide lessons online. We also provide physical lessons. You can actually call us on +263 782 491 710. This number is also WhatsApp. You can also follow us on YouTube. Thank you very much for watching.